Welcome to Explain the Charts, everyone. Today, September 23rd, 2025, we are taking an in-depth look at the S&P 500, represented by the SPY ETF, which has been making headlines by pushing into record territory. As we can see on this daily chart, the overall trend for SPY has been undeniably bullish over the past year. Recent news indicates that the S&P 500, along with the Dow and Nasdaq, is hitting fresh record highs. This impressive climb is largely fueled by renewed excitement around artificial intelligence and strong underlying economic data. Notably, Nvidia's colossal $100 billion investment in OpenAI has acted as a significant catalyst, sending AI-linked stocks soaring and underpinning broader market optimism. However, amid this euphoria, the market is also closely watching the Federal Reserve, with a highly anticipated interest rate decision expected soon and Chairman Powell scheduled to speak tomorrow. Let's narrow our focus on the daily chart to the period from late March through September 2025 to observe a critical reversal and the subsequent rally. If you look closely around early April, SPY experienced a sharp pullback, dropping from highs around $560 down to the $480 to $500 range. This dip, marked by significant selling volume on April 4th, could have been attributed to profit-taking or earlier market uncertainties not currently dominating headlines. However, this level proved to be a strong support zone, forming a robust base for a powerful recovery. Following this low, SPY embarked on a sustained upward trajectory. This rebound perfectly correlates with the prevailing narrative of AI optimism and the Federal Reserve's dovish stance, as traders began pricing in anticipated rate cuts. The steady progression upwards, with higher lows and higher highs, signals strong buying conviction. The area around 550 to 560, which was resistance back in July 2024, transformed into solid support during the latter half of 2024 and early 2025. This transformation of previous resistance into new support is a classic technical signal of a healthy uptrend. The continuous upward momentum since April demonstrates the market's resilience and strong underlying belief in the current economic narrative. This robust rally has successfully negated any bearish concerns that arose from the earlier correction. Now, let's switch to the 1-hour chart to analyze the recent price action with greater granularity, specifically from early September up to yesterday's close. We can clearly see the SPY consolidating around the $640 to $650 level in the first week of September, building energy for its next move. This period of accumulation was followed by a decisive breakout to higher levels, illustrating strong demand. The market's ability to hold these gains, even as it approaches all-time highs, is indicative of bullish sentiment. The recent string of green candles shows consistent buying pressure, propelling SPY to new record closes. This aligns well with news reports of strong consumer spending in August, which defied expectations and suggests underlying economic strength. Furthermore, the framework agreement for TikTok, involving Oracle, also likely contributed to the positive market mood, particularly for tech and related sectors. The continuous upward movement, even on an hourly scale, indicates that dips are being quickly bought up, preventing any significant pullbacks. This aggressive buying behavior is typical of a market in a strong uptrend, with investors eager to participate in the rally. The volume on these hourly pushes further confirms the conviction behind the buyers, reinforcing the current bullish bias. The current price point near the top of the range means any further upward movement will be into uncharted territory, where historical resistance levels no longer apply directly. Zooming even further into the 15-minute chart, let's examine the immediate price action over the past few trading days, from September 18th through yesterday, September 22nd. We can observe some intraday choppiness and periods of slight consolidation as traders digest the strong gains and prepare for upcoming market-moving events. The market saw relatively stable trading with small upward biases on September 18th and 19th, punctuated by minor profit-taking. Then, as we approached yesterday's session, September 22nd, we witnessed another strong push, leading to the new record high close. These smaller timeframes reveal the nervousness and indecision among some investors, particularly as they anticipate the Federal Reserve's rate decision. The CNBC report highlighted a sell the news risk, suggesting that even a positive Fed announcement could lead to short-term profit-taking. Conversely, negative company-specific news, like Kenvue's stock drop or Dexcom's decline due to short seller allegations, can create localized selling pressure, even within a bullish broader market. For active traders, these micro-movements present opportunities for short-term gains or hedging strategies. Monitoring volume spikes on these smaller timeframes can also indicate heightened interest or potential reversals, making careful observation crucial. Notice the increased volume on some of the upward moves, confirming fresh capital inflows. Returning to our daily chart for a holistic view, let's summarize the key price levels and predictions for SPY. The overall sentiment remains strongly bullish, driven by the AI revolution, a potentially dovish Fed, and robust consumer spending. For short-term bullish continuation, watch for SPY to hold above the immediate support level of $660, which represents recent consolidation lows. A confirmed break above $670 could signal further upward momentum, with the next psychological resistance potentially around $675 to $680, though this is uncharted territory. On the bearish side, a sustained break below $660, especially on higher volume, could trigger a pullback to the intermediate support at $640 to $645. This $640 to $645 level is reinforced by previous resistance areas turn support, making it a critical zone to hold. A more significant reversal would target the stronger support at $600, a price point that acted as a major hurdle in late 2024 and early 2025. The most critical long-term support remains around the $500 mark, which proved to be the bottom of the April 2025 dip, a level we deem very unlikely to be tested again in the short term, perhaps a 10% likelihood. Looking ahead, Evercore's prediction of the S&P 500 reaching 9,000 by 2026 suggests a long-term bullish outlook, a 65% likelihood contingent on sustained economic growth and technological innovation. In the short term, the probability of continued upward consolidation or minor pullbacks around the Fed announcement is about 70%. If the Fed delivers a clearly dovish tone tomorrow, expect another push towards new highs, with a 60% likelihood of testing $670 or higher within the next week. Conversely, if Powell's speech is unexpectedly hawkish, a sell the news reaction could see SPY retesting $655 to $660 with a 55% likelihood. Always pay attention to volume. Higher volume on upward moves reinforces the trend, while high volume on downward moves indicates stronger selling pressure. Keep an eye on earnings reports from key tech giants and any further developments in U.S.-China trade relations, as these can quickly shift market sentiment. Ultimately, the S&P 500 remains in a strong uptrend, but careful risk management and continuous monitoring of both technicals and fundamentals are paramount for successful trading.